Is the sort of the analysis pretty similar to what a hedge fund manager would do in terms of alpha and beta? So basically, you have to set the risk you want, but you also need to say goodbye to some upside, even though you think the market can give you that upside, because so many people have compared shipping to stocks, basically, that is so volatile and it's so like fragile in terms of the how volatile it is. So do you think it's pretty similar, the decision you do as a shipping owner compared to maybe a stock picker, that it has to be like risk based and you need to calculate both alpha and stuff?
Yeah, I think actually an option trader is more applicable than stock trader, because usually you say shipping is about options with propellers. So yeah, certainly, when we think about stuff, we think about value at risk is something. So then you think, okay, let's say I have 10 ships now in the spot market. Our cash break even is 45. Let's say market is just terrible and you're making $35,000. Or if we're making $35,000 on the new ships, the old ships should be making zero or less, But then you think, okay, how long can it stay this poor? How much money do we have? So that kind of drives your kind of willingness to take risk and how you think about stuff. And so, having a lot of, and cash is of course one thing, and kind of optimizing your financing and your cash position to your business strategy and the risk you are taking. So yeah, I think it's a bit like being an option trader, and you have to be humble, that don't think too linearly, so that don't think that, this happened and this happened. It's like more like it's just random. So you have to think more in what you call a quantum theory rather than, Isaac Newton's clockwork or, universe of kind of gravity. So it's more, think about probability, be humble that, the market can be totally different with what people are thinking, but just be prepared for everything.
But if you can build that analogy a bit further, who's the central bank and who's the politicians in the shipping industry? Because they also affect the stock market or the option trading.
Of course, dollar is the currency of shipping. So, but we are in that sense naturally hedged, because our assets are dollars, or debt is dollar, or income is dollar. The good thing with the strong dollar is that, it becomes very cheap to operate from Oslo compared to some other places if the NOK is weak. But dollar interests is very important, because if you look at our capital structure, I'm probably going ahead of myself, but I mentioned a cash break even of 45,000. So, but our OPEX, operating expenses is like $15,000 per day. So that means 30,000 is capital. And that means that, most of your costs are capital, and that's just to serve the debt for the debt. But, so the people buying a stock, they also want a return. So, maybe in order to give them a satisfactory return, you need to make 65,000. So your operating cost is 15, and then the capital is 50,000. So the cost of capital and interest rate are also very important. So of course, we are looking a lot at what, the Fed is doing and saying. But then, in the end, it's the economic growth and that is driving, demand for energy. And then for LNG in particular, you have also this other factor about decarbonization. Are people shutting down coal and switching to natural gas in order to reduce the CO2 emissions, but also reducing local pollutants? That is also another driver. So then you are talking more about politicians and the Paris Agreement and such.